Hello, and welcome to your guide to getting a mortgage and getting pre-approved. And your guide today is Mark. Mark, thanks for being here.
Yeah, my pleasure. Glad to
Mark
be.
is the #1 lender in Georgia, so you could have no better guide to this topic. And Mark's going to walk us through getting pre-qualified. But first, so we can get to know Mark a little bit, Mark, let me ask you this question. If you were a neighborhood, any neighborhood in the world or here in Atlanta, what would be your spirit neighborhood?
So any neighborhood here in Atlanta.
Or in the
If,
world. It could be
or
somewhere
in the
else
world.
too. Or in the world.
Okay, sounds good. Yeah, what an interesting question, and have not thought about that prior to now. Uh, so, um, I mean, my favorite place to vacation and stay for a while is the Newport Beach area in California, the small peninsula called Balboa, and everything's walkable. It's just a really the weather's always great, but it's just a really kind of good vibe, good culture, and just a lot of people outside, a lot to do outside there. So yeah, I think that's kind of in line with what I like to do. Just really nice, but not stuffy, and just a real outdoor sort of culture with a lot of activity. So I
I
think
can
that'd be right in
definitely
my
see that, Mark. I love that. That does
yeah,
sound like you. I love that.
yeah.
Awesome. All right. So let's get into the guide to getting a mortgage and getting pre-qualified. When someone is starting this process, and so they've, had a conversation with their real estate agent to help them go through their goals and get started. Now they're ready to get started on the financing side. What's the first thing somebody should do?
Yeah, I mean, really the best starting point is to simply begin just by getting in contact with a lender. And a lot of times there's just really simple questions people have that we can resolve fairly quickly. Those can be things as small as, how long is the pre-approval good for, or should I have my credit pulled now? Do I have any concerns about my employment? Maybe I've just gone to contract work, or maybe I have a history of self-employment. So a lot of those initial questions that I think keep people from moving forward can be answered or resolved really fast. And just having that initial conversation is a great starting point. So
And so that's an
from
actual
there, we would
conversation.
normally,
I mean, people reach out
it
and
can,
yeah.
yeah, it can be. A lot of people reach out over email as well. And a lot of times they just have some really basic questions that we resolve via email as well. So from there, though, a lot of times people are just filling out a really basic online application. It gives us a look at their employment, income history, credit history, things like that. And that often allows us to pre-approve them. It's usually a pretty short process. I think a lot of people overestimate the time that's involved or the workload that's involved. And it can be fairly quick. And at that point, you have a really good idea of where you stand most of the time.
So for a normal situation, normal person buying a house, how much time do you think they have to spend on that initial upfront conversation and loan application?
A lot of times it's under 10 minutes, to be honest, and they can have a
Wow.
real feel for how things look. Yeah. So now if you're self-employed, or maybe you have some intricacies to your finances or something of that nature, it can certainly be longer. But probably 80 to 90% of people spend 20 minutes or less. And at the end of those 20 minutes, we're able to tell them, here's what you're likely pre-approved for. Put together estimates, give them tools to be able to budget payments, down payments, closing costs, things like that.
So they have all those tools, which makes them, I mean, basically ready to go look for a house. Is that right?
Yeah, at the end of that process, you'll likely have a pre-approval letter. If not, you'll at least have an initial plan to be able to work towards pre-approval. Sometimes there's small things we need to do to credit. Sometimes there's an amount to try and save up towards. Sometimes there's even just small employment situations that will change, where maybe you go from hourly to salary or something like that, or maybe you work contractor and you become salaried, you become an employee. Um, so it'll at least give you a framework for what you need to
Yeah.
do. But for a lot of people, they're set at that point. They have a pre-approval letter. They're going to have the tools in place to be able to calculate accurate payments, accurate cost, how much they need at closing. So they'll have all of that. And at that point, you're really ready to go start looking at homes with a pre-approval letter in place and the financial knowledge to make sure you're looking at the right price point for yourself.
That's awesome. I think one of the, or two, you kind of alluded to both of these questions that I get about that a lot is one, is this going to hurt my credit? Are they going to pull my credit and will it hurt it? And two, how long is it good for? So how far in advance should I do this? relative to when I think I'm going to buy a house? What are the answer to those questions?
Yeah. It depends a bit on the loan, but most of the documents are good for 3 or 4 months. The credit is, and it's usually a very minimal impact to no impact at all for the lender or for a bank or any mortgage lender to pull your credit. Um, on your personal credit score, which is different than the mortgage score that banks obtain, sometimes it'll show it's a greater impact, but on your real credit score, it's usually not a significant impact. On average, it's a few points, and usually one of those points will return back to your score after each month that goes by. So it's rare it's a material impact at all on your credit.
And if you're going to buy a house 3 or 4 months out, you've got 3 or 4 months that you're actually back to where you were.
Yeah, absolutely.
Yeah. So now that you have this knowledge, people go out and start to look for a house, find a house. What about when they've actually found the house? How do we go from pre-approval to actually locking things in, getting the loan, buying the house?
Yeah. So prior to going under contract, we'll have estimated your payments, your cost, all that sort of stuff. Now you're under contract for a home. So at this point, we will go ahead and firm up those numbers. We'll have a real sales price. We'll have real property taxes, real seller contributions, things of that nature. So we will go ahead and update all those figures for you. So that way you can firm up what you actually want to do, and make sure that's still the right house for you. At that point as well, you can lock in an interest rate once you're under contract on a house. And from there, we'll start collecting all the documentation to support whatever we discussed on the pre-approval. So a lot of that documentation we can get for you now. So there's a lot of automation to it, but some of it would need the borrower to provide. So they'll often be providing things like bank statements or documenting where their down payment will be coming from, signing their loan documents, or at least their initial ones. And that will allow us to also get things going like ordering the appraisal, ordering title work, things of that nature.
How accurate are those estimates? As you think about the estimate to the actual purchase, how accurate are those estimates? And then when do you have an actual firm cost on it?
Yeah. The estimates are usually very, very close. I mean, there will be some discrepancies, but the net at the end of the day, the net you need to send to closing and your net payment is usually very, very close to what we initially estimated. The final cost and the final payment usually come in on a final closing statement about 6 to 7 days prior to closing. So we will draft all of that together with a closing attorney, and then that'll be your final figures. We'll review those relative to the estimate to make sure they line up with what the buyer expected. And so they usually have about a week to review all that to make sure it lines up with what they were wanting.
Awesome. And this is probably a question that I get from first-time home buyers more often, but how much do people need to buy a house? If you know you can afford a $2,000 per month payment, you're like, hey, I'm good on the monthly payment, but what about the down payment? How much money do people actually have to have in order to put down to get the loan?
Yeah. There are options for grant products out there which can allow for very minimal down payments. But on average, you're best served to put down at least 3% as a starting point. And then from there, it'll only improve your loan situation. So if you could go to 5%, 10%, and so on, it'll improve the loan you get, not drastically, but it does offer a few better options. But at a minimum, 3 to 3.5% is usually a good starting point. Ensure you're getting normal, really good financing.
So I bet that's lower than what most people think. I mean, when you think about that, 3% on a $300,000 house is $9,000, which isn't nothing, but relative to the price of the house, really a pretty good option.
Yeah, it certainly creates a very reasonable barrier of entry
Yeah,
to purchase.
definitely. All right. So, Mark, as people start this process of getting their loan and getting pre approved, what is the one secret or one most important thing that you would say for folks in that situation?
Yeah. I think in so many ways you can't start figuring it out too early, because it is shocking how many people have long-term plans to buy homes. But then once they realize, hey, I'm either pre-approved or kind of have an idea of what they want, and I'm sure the agents from your team can testify to this, it's shocking how often you find something quickly and you're glad you have all that in good order. The other reason you almost can't start too early is because there's such minimal negatives to account for. I mean, maybe a few points on your credit, the only negative, and some time spent doing it. But when you have time, you can really fix a lot of potential problems, or you can improve your situation, whether that's making a couple small changes to your credit that may be easy to make, or saving up a little bit more that maybe had you waited, you wouldn't have planned to save up for. It really just opens up a lot of doors. And then if you do want to spend some time looking, you're really ensuring you're looking at the right price point. And I think having a good target range where that target isn't too wide as you start looking is a huge benefit to really focusing your search and ensuring you're spending your time wisely. So I think a lot of people spend time thinking about it, and they're probably going to do it anyways. And rather than just take that first step and moving forward, had they done it weeks or months in advance, they'd often had found themselves in a better situation with better information.
Man, that is great advice, Mark. And you said earlier, it only takes literally 10 minutes to do this, and 10 minutes can make everything else so much easier and so much better. So I absolutely love that advice.
Yeah.
Awesome. Well, Mark, thanks for being here today. Thanks for being our guide to getting pre-qualified and our guide to mortgage financing. We really appreciate you. And for everyone who is watching, thanks for watching. We will see you on the next one. Thanks, Mark.
Thanks. Appreciate it.